Hello, traders. We're back for another market recap and a quick discussion about today's trades. It's Thursday, September 4, 2025. A nice big update today. The bulls are knocking on the door of SPY 650, and based on what we're seeing in the post market, they might be ready to push it through. In fact, the futures have already driven price higher after the close. They actually stalled out right at a level we had marked just under 650, which we'll cover shortly. For now, let's move into the daily levels and the game plan. The key axis for today was 644.05. Staying above was good for the bulls, while staying below would have been good for the bears. Going into the open, we framed the action as middle ground, which usually means good opportunities on both sides of the tape. But when we zoomed out to the 4-hour chart, talked about that for a bit, it was clear that the bulls might be gearing up for something bigger. I pointed out that if they could get hourly candles above 646.50, that would likely open the door for a push to 650. We also flagged the 10 a.m. data release as something that could move price. And sure enough, right at that data release, right afterward, the bulls did a little fake out by getting below the axis level for a few minutes. But once that maneuver shook out the amateurs, they got price to climb for the rest of the day, and above the axis and certainly above 646.50, the door was open, as we said. And here is how the day actually played out by the rules. There was a long at 644.82, triggered right after that 15-minute window opened. Quick base hit, 644.05, another long trade. They bounced there. That handed over a nice clean base hit. 646.10, there was a short there, but that one did not work out at first. If you stayed in that short trade at that level and played by the rules, it would have produced a 6.5-point fumble, but the reversal that followed gave back a base hit of 4 points or more if you managed it well. The level at 647.51, you would have gone short there, triggered it, but ended up a wash. Price came just short of the profit objective, then turned around. So jumping out at break even was a safe move, and that was another rules-based approach to that trade. So by the end of the open session, that's 3 base hits, 1 fumble, 1 wash, a net positive with the bulls clearly showing their hand. And it's worth pointing out that in the post market, price made a run straight to the level at 649.54 that we had posted in the morning. That's where they stalled. Again, this is why the levels are important. They're not just random lines. They matter, and they're tradable if you trust the process. On my end, I went long at 644.82 with a limit order. I was trying to get filled for 6 contracts, but only 3 got picked up. So it still worked out, 4 points on those contracts. It was a quick $600. Then I went long again down at 644.05. This time with 2 contracts, pulled 3 points. That's $300. So $900 total before commissions today. Both trades wrapped up in the first hour, and I called it a day. Stopped the recording around 12 noon. On the tracking logs, the playing by the rules log, 12 points up, 6.5 points down, so net 5.5 S&P points. On the Sam's trades, my trades, the equivalent of 4.5 points on 4 contracts. Again, we already said that's $900 before commissions, all done within the first hour of the morning session. Back to the daily chart. So here we are. The bulls want to claim 650. The question is whether they get there during the regular trading hours or if they gap above it overnight and open Friday morning. Depends on where you are. I'm in the Eastern time zone, as you know. They open Friday morning already above that milestone. That happens fairly often. When price can't quite get above a level intraday, they wait until the overnight session and then they gap over it the next morning. So we can make the case that the bulls have been trying to tag 650 for weeks, at least a couple weeks. At this point, they're a stone's throw away, which means they're close enough that we can almost consider it done, but until it's official, we'll keep watching. So Friday's weekly close, that's tomorrow, it's going to be critical. If the SPY closes above 650 tomorrow, that probably reduces the significance of that timing component that we've been talking about on the weekly chart, and in that case, we'll start looking for new upside targets above 650. But if they fall short or fail to close strong above it, that could open the door for a different kind of conversation next week. Either way, this is a very important moment for the SPY, both in terms of price and time. That's a wrap for Thursday. The bulls kept momentum alive. The levels provided some pretty good setups. 650 is now within reach. So tomorrow's close will tell us a lot about whether this rally has more room or if the timing setup finally favors something else, possibly to the downside. As always, thanks for watching. If this breakdown helps you prepare for the next session, consider liking this video. I would appreciate it. Subscribing to the channel would help it grow and reach more traders like yourself. Stay disciplined and stay sharp. I will talk to you in the next recap.